I want to go back to May of 1984 when you and I were weaned on continental Illinois. Are our guards down right now? Are things so stable and so managed that we're not going to see the next continental Illinois come?
I don't think in the banking system, absolutely not. Dodd-Frank, to be thanked for that, probably
And Jamie Dimon has said the same
overdone.
thing.
Yeah, I can't, and I'm always looking for trouble, which you have to do if you're following this industry, because you never see it until too late sometimes. I don't see anything within the banking system that is worrisome at all in terms of risk. And I really doubt that there will be, at the end of this cycle, whenever it happens, any kind of massive loss issue or anything like that. It's just a different industry now, different psychology. And by the way, the largest banks have been moving out of lending itself to avoid...
Out of the commercial aspect.
Yeah, because look at their capital ratios now. They're much higher than they used to be relative to other banks. And right or wrong, you wouldn't run a bank like that and be looking for lending opportunities. You'd be looking for fee opportunities, things like that.
How does Deutsche Bank get out of this, right? There are questions about revenue, whether they can actually hit their targets. The investors will continue pushing to see whether they really need to raise capital. How does this end?
I think it's ending now, and you're seeing it. Because if you look, let's say 10, 15 years ago, and you tried to do logarithmic charts of trading and results in that sector for all of Wall Street, all of capital markets, you got solid double-digit trendline growth. You had your bumps up and down, but it was substantial. It is no longer. That's gone. Goldman Sachs is a good example of adjusting for that. They're not out of the business, but they're certainly scaling back. Unfortunately, Bankers Trust, the Bankers Trust combination with Deutsche pushed them much further into the trading side than maybe they should have gone. So it's just a matter of the pain of getting it right-sized, and I hope that institution survives on its own, because it'll be good for Europe.
Right.
And I'm betting it will. But the numbers are gone now. It's going to be a different business model, and hopefully clear for a lot of investors.
But, Robert, it's a business model on a German economy that is going through a lot of hardship. Again, how difficult is that? I mean, I can't see anywhere where actually Deutsche Bank is getting a helping hand.
No, they're not, which is unfortunate. Interest rates certainly hurt them and every other bank in Europe in general. Number two, the European economy is obviously flirting with recession again. And number three, Europe needs some friends now, not a bunch of trade skirmishes. So they're not a German bank, per se. They're a European bank, which is good. But you're right. There's nothing there that's going to make this easier for them.
Tell me about global Wall Street in New York. You got to be here, but there's all this modern technology. You look at the kids today going, what do you, I got a brilliant email from a guy with the kind of experience you and I have who said, look, they're just going to hire the young Turks and work them for 3-4 years and then rehire the next tranche of young Turks. I mean, what's the fabric of the future of New York Wall Street?
I think young Turks or Turks in general will be passé. I think there's a cultural shift on Wall Street,
In what way?
which is healthy.
Describe that.
A little more professional business-like, a little less swagger. But more importantly, what I'm seeing in the industry is, and we're an example, Sandler's an example. We've picked a great sector to focus on and specialize.
You went narrow.
Yeah, we went,
okay,
but not so narrow. But I'll tell you, even that's not good enough, and that's why it is exciting and a relief to have Piper and us join. Because there's a lot of stuff that can add that being in one sector, no matter how good you are,